Hello, I'm Nick Cheek, Managing Editor of Mortgage Solutions, and welcome to today's debate in association with Family Building Society. Let's introduce our guests. We have Darren Deacon, Head of Intermediary Sales at Family Building Society, Richard Merrett, Director of Strategic Relationships at Simply Biz Mortgages, and Greg Cunnington, Chief Operations Officer at LDN Finance. Welcome to you all, and lovely to have you here today. First up, the later life lending market. Last year, 2022, saw real highs in certain sections of the later life lending market, and despite the ructions of the disastrous mini-budget and a fluctuating interest rate environment, the market has continued to progress well in 2023, although, much like the rest of the industry, it's not been immune to base rate rises, swap rate fluctuations, and customers who are taking a wait-and-see attitude. So with that in mind, what is the current state of the later life lending market?
Well, Nick, it's obviously a very challenging market at this moment in time. We're certainly seeing there being a lot of pressure on purchases. In fact, I think 21% is what's being led to believe is going to be the downturn from last year. So much of the mortgage market is going to be driven, as we believe, by product transfers and remortgages. So that puts pressure on the market in general, and obviously in the later life space. However, us as a lender, we perhaps have been a little bit more protected by that, in that a lot of the business that we see is remortgage business, where customers are coming away from the high street and coming to the likes of ourselves.
Okay. Richard, how do you see the market now?
It's definitely more challenging than it was last year. We've gone from a benign interest rate environment to one that's extremely volatile and a lot higher, obviously.
Yeah.
So I think probably the biggest impact is the customers that are proceeding with something now are doing so out of necessity. There's less of the people who are looking at additional borrowing to fund less important things. But there is still, I think, a huge opportunity. The challenges that we see in the later life market are also played out in the mainstream market. So there's impact there to first-time buyers in particular. So a lot of the additional borrowing that we're seeing, whether that be through mainstream mortgages for older borrowers or even in equity release, is people looking to support family. I think sort of other opportunities exist with encouraging more IFAs to look at the sector and work with mortgage or equity release specialists, because the challenges that we spoke about obviously also impact the pension market as well. So I think we're certainly seeing across Simply Biz a lot of our firms who are engaging more and more with IFAs and encouraging them to consider working with a partner and getting customers to look at housing wealth to form part of the bigger picture.
Okay, interesting. Greg, do you have anything to add to that on the market?
No, we're seeing very similar. So I think exactly as Darren's point, we're seeing heavy refinance. I think the one thing we are seeing more of, and personally I think we're only at the tip of the iceberg, are a lot of applicants who are coming to the end of their original mortgage term, so kind of 72, 73, when they took out their Halifax mortgage, thought that was going to be really old and they'd obviously downsize, getting there, feeling fit as a fiddle, don't want to move, it's for family home, and looking to refinance on that basis. So although the market definitely is challenging and a bit slower than last year, we're actually seeing that part of the market pick up and increase.
Okay, interesting. Thanks, Greg. So we've talked about the state of the market, and given that, there are going to be opportunities there. And I turn to you, Richard. What do you see as the opportunities in the market at present?
So I think there's a lot of scope to be able to help people with some of the modern pressures. So, for example, big issue at the moment is cost of living crisis, and clearly that's going to impact people on reduced incomes, which would typically be people in retirement. So I think some of the sort of positive angles are on helping people in that sort of situation potentially green their home, make them more energy efficient, and therefore looking at cost saving through doing that. So I think that's a really big opportunity. And obviously there's a hell of a lot of properties in the UK that are unmortgaged. So being able to help those older borrowers address that side of things. As I alluded to earlier, supporting family. through assistance with deposits and what have you. And then I think the other big one is the sort of impact to tax and wealth planning. If you look over the last period of time, the housing market's performed extremely well. We had 15% national average increases last year. So a lot of people are sat on a lot of equity, and therefore I think actually making that part of the wealth assessment that people look at both in their retirement planning for an income purpose, but also provision against inheritance tax as well.
Okay, interesting. Gentlemen, you want to come in on that about?
Well, I just think the sector as a whole, Nick, to be honest, it's an underserved sector, and there's the number of over 55 borrowers, I think, generated somewhere in the region of about 28 billion in 2021. 4 out of 5 of those were mortgages. So that being said, that when we go out, when our BDMs and myself, we go out and speak with brokers, they still haven't got the awareness, perhaps, that you can lend later into life, you can lend up to age 95, rather than automatically looking at other options, maybe as selling the property or equity release. So I think the general awareness of the sector is growing. It's a growing sector. It's an ageing population. So the opportunities are there with the awareness being brought out.
Yeah, my only point to add was, in complete agreement, I almost feel the sector needs to go a bit full Tony Blair in terms of education. Because if you actually now look at the later life, the Rio and the equity release products, they're very sophisticated. They're pretty much standard mortgages with real flexibility. There's great options for lots of clients, but I think there is still a bit of a stigma on the sector. And we see a lot of applicants who don't even know those products exist. And I think if we can, however is best to do it as an industry, address that and actually educate more people on how the products can help, I think the market could grow genuinely quite significantly.
Well, thanks for that, Greg, because that's a really nice segue into the next question, which is about kind of innovation in the market and products and what is on the market. So I'll turn to you first, Darren. Just what are the innovative products that are available on the market at present?
Well, I mean, talking from our point of view, obviously we're very active in this area. So we do emphasise and focus a lot on intergenerational lending, not just specifically targeting the later life borrower for their own needs. So there's a number of things. We offer a residential offset mortgage, which you could take to age 95, for example. Obviously ideal for those older borrowers that have got savings, and they can reduce their mortgage in that way and still get an extended term. We offer joint borrower sole proprietor, where parents can help their sons and daughter get on the property ladder. And again, by taking them to age 95, is an innovative way to allow those first-time buyers to get onto the ladder. And it's not just exclusively for the first-time buyer, it can be for home movers in all types of situations.
Excellent.
So for me, I think, as Darren alluded to, the size of the market for over 55s is huge, 28 billion. Equity release last year was only 6 billion. So there's a huge area of this for non-equity release mortgage products. And I think innovations like the joint borrower sole proprietor and the offset products for older borrowers are things that intermediaries need to be far more aware of, because they're a great segue to older borrowers sort of pre-equity release, and it gives them options that probably the high street lenders, the mainstream market doesn't, and there's quite a few lenders that are in that space. What we're going to see over time as well is, I think, an evolution of Rio products. Rio's been very good for the market in terms of raising awareness, raising profile, gives customers an option, but we've not quite seen the volumes in it because of the challenges around affordability. And I know there's a number of the equity release providers who are actually looking at hybrid products that will sort of plug the gap between Rio and equity release. So I think we're going to see a lot more evolution over the next period of time.
Okay. Greg, do you have anything to add into that?
No, for me, I think joint borrower sole proprietor and offset are fantastic products in this space. The only thing for me is a client's not going to sit there in the street and go, I really need a joint borrower sole proprietor facility with an offset facility. So as Richard's point, it's about advisors actually making sure they upskill and understand these products and are going through and explaining them to their clients, because actually those fantastic options already exist.
Great, thank you. And thank you for joining us, and we hope to see you again next time.